When you sit back and think like, hey, 5 years from now, this is what this business is going to look like. What does it look like in your mind?
What do I think it will end up being? I think we will be a 35 plus states across the country and be a true national provider of best in class lawn care with some of the best brands in the industry.
Hi, I'm Paul Giannamore. I wanted to welcome our new subscribers to the channel. You know, historically, Potomac TV has been focused on business and operational information and interviews for residential and commercial services business owners. But after the publication of the Sell-Side M&A Masterclass last month, my LinkedIn inbox has been inundated with a variety of different requests. So Dylan and I will be sitting down filming more extensive M&A masterclasses, both focusing on the sell side as well as the buy side. I intend to talk about the choice of process, delving deep into M&A psychology, as well as extensive buy side practice, approach, and due diligence. For those of you who have not subscribed, you can click below and subscribe to the channel. Furthermore, we've provided a link here in the description where you can get on our email distribution list. And if you do that, you'll receive an email right in your inbox with our latest publications. Feel free to put a comment below on the types of things you want to see. I mean, this channel is largely driven by you, the viewer, and what you want to see from us. Again, thanks for joining us here at Potomac TV. Jordan, thanks for joining me today.
Thanks so much for having me, Paul.
So let's get down to business. You're running M&A over at Senske.
I am, yes.
Senske, I think before we get into you, let's do a little bit of background on Senske.
Sure.
What are you guys up to?
Yeah, so I came along with the sponsor. So once GTCR, who is our private equity group that's backed by Senske now, made their initial investment into the lawn care industry by acquiring Senske in December of 22. That's where myself and then Casey Taylor, Nate Hurst, and Rob Thomas all joined as well. So Casey and Nate became the CEOs. Chris, stepped down as acting CEO, still stays on our board, and still see him at all the events as well. And then I stepped in to help run the M&A division and grow and build and scale the business. So we acquired, acquiring Senske in December of 2022, we've done 16 acquisitions so far. So highly acquisitive company. I mean, we're doing a similar roll-up strategy in this industry, trying to be able to truly build a best-in-class lawn care pest control business. And so we are working actively to build it national, still to today. Right now, we span 16 states and all across Canada as well. So we actually go through all of North America. And mostly have done that through acquisition, but I've continued to build the organic growth side as well by greenfielding a lot of locations in certain markets as well, and looking to build a premier business.
Now, were you working for GTCR, or did they bring you on to the portfolio company?
So yeah, it's interesting. We were actually at a company called WaterLogic before. So it's a point-of-use water cooler manufacturer, and so we did a very similar roll-up strategy in that industry before. Before exiting, we built WaterLogic for a period of time and ended up exiting to Culligan actually. And as part of that, Nate and Casey partnered up with GTCR, and they brought me along with them. So we left at the sale of WaterLogic to Culligan, and then we moved on, partnered with GTCR for about 6 months, looked at a variety of different industries, something that we really thought was interesting, and we fell in love with lawn care actually. It's an amazing industry, highly fragmented industry, so it allows you to be able to build a roll-up strategy similar to what we did in the water side, and then they've one national player that really is kind of the national player in True Green that we would like to be competitive with and, think that we can compete with. So we looked at it as route-based business as well. So it's very similar to the same strategy that we built in the water side. So a lot of similarities and everything kind of tailored towards what, we had just done, and a lot of do's and don'ts, right, that we learned during that time that we were able to roll out during our time here. So
now I know Senske has always been a predominantly lawn care business, but they do have significant pest control services, right? And so, as you guys have continued to grow this business since the firm partnered with GTCR, it appears to me that the majority of your focus has been on lawn care acquisitions. Is that correct?
That's correct. Yeah, and we still do. We still have done 2 pest control, pure pest businesses since acquiring. But I would say our main focus right now has been in the lawn care side, and it's a lot more fragmented. I would say a lot less rolled up than the pest control industry is as a whole, and so we kind of find that need. And our main core service is lawn care. I mean, Senske is a lawn care business, right? We do pest control services. We do lawn and tree tree and shrub care services as well. But our core business is lawn care, and so that's ultimately what we wanted to continue to build out and sought out, right, from an M&A perspective.
And still, the majority of the business is in the Pacific Northwest. You guys are kind of growing nationally, but that's kind of the core of the business, correct?
So Senske, yes, and we've actually gone through the position of rebranding our business now. So we're actually a Senske family of companies today. So we originally acquired their Senske Services, right, which still is very active and is our main parent company out in the Northwest. So that is where the bulk of our operation is, up in, I guess they're originally headquartered in Kennewick, span Idaho, Utah, Colorado, and then also we've expanded out to Oregon. So that's where main parent Senske is. Since then, we run 10 different brands, though, across the country. So now we are very diverse, spread kind of all over the place, and almost coast to coast in complete combined, but we're missing 2 states that we're hoping to fill in soon to be able to really truly have that coast to coast presence.
Is this strategy as it is today to then run this as a family of local brands as opposed to kind of a true green national brand? Is that the idea?
Yeah, I think that's right. So we are actively, and when partnering with some of these businesses that we acquire, right, they've got years and years of great marketing and brand recognition in their own respective markets, right? It didn't make sense for us to then, acquire a premier business out on the East Coast and call them Senske, right? And nobody knows who or what Senske is out there. So, a lot of those great local brands, we wanted to keep, maintain, and grow those. And we are also, there's also plays within the market that we're doing where there will be rebranding over to whatever it is our platform brand is in that general respective market. But for the most part, we do run and maintain and would like to keep those businesses and names separate. It just makes sense.
And so for you now, being relatively new to lawn care, what are some things you've learned about the business?
Yeah, it's a great industry. It's a great market. I focus again mainly on just the growth aspect, so more of the inorganic growth strategy, so the acquisition-based strategy, and with that, every deal is unique, and then no matter what industry you do, right, a deal is a deal. So you like to think that they're largely the same, but with every single deal you do, you find different nuances, different areas of opportunity as well on how to improve or what to roll out. So it seems like it's constantly evolving. I would say just kind of one main thing, but I would also think a little bit of the lingo, right, as you switch to lawn care. My background isn't in lawn care. I don't know all the agronomic programs and everything, right? And I'm not a horticulturalist, but we do know a lot about growing and building and scaling businesses. So that's truly what we try to stick to and allow everyone else to that's much more familiar with that to stick with that. So,
and what are some attributes to the specific types of targets you guys like to acquire?
So there's not, again, one main target. We have a pretty big range, to be honest with you. We've done many acquisitions, all throughout that. I would say, anything from $500,000 of revenue in a tuck-in market that, somebody wants to get rid of a book of business, or, as big as, $25 million of revenue in a proper platform business, right? That's very well known in a main area. So it really varies, and there's a wide range. I would say what we truly look for is pure lawn care, so spray type businesses where you're doing that recurring revenue spray work of lawn care side, and that's ultimately what we're after. And then size, if it's in market, we can make sense of pretty much anything. And if it's not in market, right, then it's usually has to be somewhat sizable. And to put a dollar amount on it, it's pretty hard. I would say it's usually dependent on just the setup, right? The pure setup of the business from an employee perspective. If they're built and they're able to grow and have the infrastructure to scale is really important. But being able to have the team that's needed to grow, right, so we can step in pretty seamlessly, I think that's really what helps us constitute and make sense of that platform type of acquisition.
Considering you're relatively new to lawn care, I'm interested in understanding, what are some of the nuances you've seen based on geography? And here's what I mean by that. Like, clearly more northern markets are going to have shorter seasons,
Yep.
also less competition, so you may have higher pricing.
Yep.
In the Southeast, it can get very, very competitive very quickly, downward pressure on pricing. So what are some nuances you've seen based on geographic region?
Yeah, I mean, I think you said it right? I mean, up north, I guess when you think of lawn care, you're thinking of a 12-month season where you can, be able to produce services January through December. So that's technically where it's highly competitive, right? Pricing is extremely competitive in those markets, but the acquisitions is extremely competitive as well in those markets. And then up north, you have a lot more barriers to entry, which will also make it very compelling to make an initial investment up there, right? So. I guess to say one's better or one's different. We're across 16 states. We've done plenty of acquisitions up north. We've acquired an entire franchise business up throughout Canada, which has the lowest or the shortest season of any any of the markets. But also have recently actually just grown into Georgia and in the Southeast, and we have a big Texas operation. So it's nice because they all kind of combat each other. It's a little bit more. It's not as cyclical, right, in your Southeast regions, which makes it really compelling. But it is extremely competitive, which makes it difficult on pricing and just to win the operation. So
Do you tend to see customer retention rates differ based on geography? I realize that's a difficult question because every company, depending on service delivery and so on and so forth, but are there any generalizations you can make with regard to customer retention rates?
I think that I guess from what I've seen as well, the Southeast region in general, right, or just the more southern states, is highly competitive. So that allows for a much easier way for your customers to leave, right? And so the retention's usually higher actually up in the north, which is pretty surprising just considering. But is a lot less competition and a lot less players to go to, and so it's pretty generalized what I've seen in this industry.
And you guys are not in Florida now.
We are not actively in Florida now.
Is that probably a market you're looking to avoid, I would imagine?
No, I wouldn't say avoid. We definitely, we like Florida. I like the beach too, so we definitely want to be able to grow down to the Florida market. So we're hoping one of these days in one of these acquisitions or Greenfield. I mean, we just bought an amazing business in Arbornomics in Georgia, based in Atlanta. So maybe there's an opportunity for us to be able to grow that platform down south to Florida. So we'll see.
Yeah, I just brought that up just because I know Florida is an extremely competitive place, right?
Extremely. It also is very difficult, right? When you think of Florida, there's a lot of landscape that has to go along with it, right? It's kind of the more pure play businesses in Florida to be competitive. To just have that pure lawn care spray work, right, is more difficult. I feel like in Florida, that market's a lot more tailored to being able to mow, do installs, build outs, and also do your fertilization, weed control type of services. So it also makes it more unique for us to grow into because we don't do some of those service lines. So,
when you think about GTCR, of course, they've been around for decades and decades. Yeah, in fact, my former bosses at American Capital came from the Chicago office of GTCR. I guess it was Gold or Toma back then. But when you take a firm like GTCR, what's What would be a typical investment horizon for something like this?
Yeah, I would say usually our investment is about 5 to 6 years, right? That GTCR would need to be able to return to their investors, right? Some form of liquidity event. So, yeah, I would say about 5 to 7 years, something in that range, right?
And I guess depending upon the fund, GTCR has a variety of different funds.
Yep.
What's kind of perhaps the target in terms of, we'll use basic numbers and revenue. What do you see this business getting up to in terms of revenue? I know it depends upon opportunities and there's a lot, and I'm asking a lot of questions, but what's kind of, when you sit back and think like, hey, 5 years from now, this is what this business is going to look like. What does it look like in your mind?
Yeah, without obviously divulging too much about our investment thesis, we had a number in mind, right? I think that number was, originally we wanted to be able to grow it to be about 250 million in revenue across the country, right? And originally what we had anticipated and originally thought was, okay, we would do it and grow it across the U.S. And we had that time horizon 5 to 7 years again, right, for a liquidity event. I would say we are within the first 2 years much further ahead than any of us probably would have expected to be, or would have thought we would have had. We've had some amazing early success in this industry, and we've partnered with some amazing companies, right? Some of the most premier brands and best-in-class companies within their respective markets and regions, and so we've been growing very, very quickly, and it's been a blessing to see, to be honest with you. And so, what do I think it will end up being? I think we will be a 35 plus states across the country and be a true national provider of best-in-class lawn care with some of the best brands in the industry.
Is there any seasonality to lawn care acquisitions from your perspective?
Yes, there is, for sure, and that's partly what I've also come to know really quickly is because of the cyclicality, right? And in the off season, so if you think about, I guess pretty much Q4, Q1, right? Everyone, it seems like, is trying to sell their business at the same time, right? Everyone's going through that. Okay, now's the time to be able to, the season's over before the new season kicks off. Maybe it's time that we think about it, and then you get through Q2 is mainly when everyone's heads down, focused on, trying to get the season up and running. And there's a lot of work and effort that takes, goes into that, bringing all your, employees back in and really being able to, get the camaraderie around it to start the new season, right? It makes it much more difficult to first, approach people at that time and then, get them to want to think about selling on top of that is extremely difficult. So usually you would see it's peaks Q4, Q1, tailors down once the season starts to Q2, Q3.
For years, True Green was one of the only acquirers of lawn care businesses, right? I mean, it was clearly way before your time, and they had a strong bias to doing stuff in Q1.
Yeah.
They didn't want to hold it over the winter. Do you guys look at it that way as well?
We don't. We do tons of acquisitions in Q4 and Q1, just mainly because that's usually what everyone's best time horizon is, and so we like to tailor to those investors or to the sellers themselves, and so that's usually when we do the most acquisitions. But we do them anytime, all year round. I mean, if you find a great business, we don't mind holding them during the winter months, right, and incurring some of that initial expense if we're here for the long term, right, and for what that investment's going to do for us and over the next 5-10 year period rather than a month or two during the winter. So
there's a lot of sponsor-backed lawn care businesses now, way more than there were 5 years ago.
Yeah.
How is Senske differentiated, at least potentially in the eyes of sellers, versus some of the other ones? Can you talk a little bit about that?
Yeah. How are we different? I would say outside of myself and our amazing team that we have, right? All of our charm and everything really helps. But no, more than anything, I would say, we are taking a different approach from a pure, private equity backed business, right? We truly want to invest into these businesses, and we really want to be able to see these businesses grow and flourish. And so we are extremely selective right now as to who we are partnering with, who we are bringing on as well. I mean, it's not just go out there and torch the market and acquire everyone. we are, again, very selective. So I think it's making sure that the seller's vision aligns, for their future of their business aligns with what we want to do as well. And so, that starts mainly with the employees, making sure that they're well taken care of and that transition goes really well for them. We do look to bring them all on and make sure that they're well taken care of and look to really invest behind them because they're the ones who've, are putting in the work every single day to truly build that business. And that same feeling doesn't always align with all the with everyone else, right? So I would say it's truly what you want to get out of it, but we have a pretty great story, and we're thinking about it and making sure we're very meticulous in how we're thinking about the growth of the business and not growing too fast so that we don't know how to continue that growth, but really making sure it's tailored to our efforts and putting in the investment behind it as well, to meet the needs. So,
Do you envision this business having any other additional ancillary services besides lawn and pest?
We do tree and shrub care as well, and I think that goes really, really, hand in hand. The plant healthcare side of the industry, with the lawn care piece is goes hand in hand, and so you'll see a lot of these companies do, a variety of almost like hardly ever are there just pure lawn care companies, right? I would say you usually find a lot of lawn care companies, right, the spray type businesses that do a lot of plant health care, tree and shrub care, and pest control services all together, right? So that's kind of how we get into the variety of different service offerings that we provide as well. And we want to be able to meet kind of all of the customers' needs, and we do a lot of different services outside of just those 2 or 3, depending on the market as well. So some demand that you do a little bit of everything, and so we make sure we tailor to the customers for some of those markets. But I would say it's a little bit of everything whenever basically across those three service lines.
Outside of geography, because obviously geography is important, specifically when you're growing from the base that you guys are in, what are some things that get you excited about any particular target, right? Some attributes that you see in that target, whether it be management, people, margin profile, growth rates, and what are some things that you look at and you're like, yeah, that's not for us?
Yeah. So I would say, management is a big piece, right? Being able to have a team in place that, the seller leaves, the business doesn't just, crumble the next day, right? So I think that's a big piece, being able to make sure you have your management team and your employees set up to be able to continue to grow, and, the sellers are thinking through, okay, if I'm gone tomorrow, what happens to my business, right? Because the investors are all thinking the same thing, right? So we want to be able to make sure, and we take a lot of that load off ourselves, and we've built into our integration team really heavily to be able to help with that period and that transition. But that always is really helpful, right, when there's a GM or management in place. But margin profile is extremely attractive for anyone, right? Any investor. It's always really important. I would say, size, scalability of growing, right? Multiple branches across multiple different markets, right, is extremely attractive. Management, margin profile, and the organic growth piece to it, right? It's making sure that organically the business is continuing to grow, top line and bottom line, by themselves. So I think that's really important.
And how do you define that? I mean, so what's a good growth rate for you on top and bottom line versus mediocre?
Yeah, I would say in this industry, it's I would say a good growth rate, 10%. Top line, I would say, is kind of what would be needed to be attractive. I think that's pretty important. And obviously, it's easier for a smaller business to grow in a bigger market, right? Also depends on a variety of different factors as to what market and what geography we're talking about. But overall, I would say the standard would be about 10% growth rate, top line and bottom line every year. So.
And what's an interesting gross margin and operating margin for somebody like you?
Yeah, and so we talk in terms of EBITDA. I'm sure, for all the listeners there, it's earnings before interest, taxes, depreciation, and amortization. Just shows basically the true profitability of the business and of the operation. I would say in this industry, something that's really attractive, right, is 20% and above. Some of the best, premier businesses are doing 25 to 30%. If you're, below 20%, I I would reevaluate and see kind of what, where you're losing the margin, whether that's pricing or, employee costs or whatever that may be. I think that's also a really important piece to margin is your gross profit. And then from a gross profit perspective, about 55-60% is on average what we want to see that, you're being able to produce for your top line service.
When you're looking at a target, how deeply do you drill into historical retention rates? Customer retention rates, that is.
Yeah, I think so again, that, depends amongst acquisitions that we're doing. And M&A is pretty much all, it's all, it all depends, right? But I would say, we definitely, dig in very meticulously into the customer retention rates for all of these different businesses. We want to be able to see, how high their retention is, both from a customer and employee perspective are both, extremely important. But, to say there's, to put a pin on what that looks like right in this market, it's, might make some people upset, right, about what that may look like or what that may be. But, I don't know. I think 20% is kind of seems like it's about standard, right, of customer churn in this industry. But we would like to see it much more improved than that.
Have you ever performed a lawn care service yourself?
I have not. I would say I mow my own. I do. I guess I somewhat have. I mown my own yard and did my own weed control and fertilization for my house. But that was before I guess we bought our platform here in Texas, Emerald Lawns. So after we did that, they've done a much better job of my lawn than I ever did. But
I can imagine.
But yeah, so we've been very fortunate to have them. But once we decided we were going to kind of get into this industry, I started taking a much closer look as to what that all entails, and so try to do it on my own, and you have a much bigger respect for the techs and all the employees that we have across the board.
I'm curious, this platform business versus your last one, what are some of the differences from an M&A perspective that you've noticed?
This business in this industry within itself is there's a lot more companies, and it's again water was highly fragmented, but there was really only two true players between WaterLogic and Colligan, which we were in the water space. So you're always competing against the same person pretty much for every single deal. Here, as you mentioned earlier, right, there are starting to become a lot more institutional investors in this industry, right, a lot more private equity-backed businesses that we see, but they're mostly regional based, and so we do compete against them in most of different regions wherever that business may be. But yeah, I would say there's just a lot more lawn care companies here than there were water companies. So it was a pretty niche service line and point of use water. So rather than generalized lawn care pest control, it seems that there's millions of companies across the country. So
from a funnel perspective, let's say that you've got 10 potential targets. How many of those will you actually do? What does that look like? I'm just trying to gauge typically how selective you would be. And
yeah, so I would say right when they originally get on the pipeline, we put any lawn care company basically on the pipeline. And then there's multiple conversations. We ask for some high level initial data, and then we get pretty granular about what that vision and that focus for them and that aspect of what they want out of their business and what they want out of selling their company. I would say, usually on that, the majority of pure lawn care companies, right, that focus on the recurring revenue stream, fertilization, weed control services that we produce, they get on our pipeline and we have initial conversations. We do close quite a bit of them. I would say almost 7 for every 10 or so that we talk to. So, sometimes the visions don't always align, and that's okay, right? I mean, that's perfectly fine, and we're very transparent. I think that's kind of the biggest aspect for myself, right, when doing a deal is making sure we're, all cards are on the table, and I'm completely transparent from the beginning because I don't want, you to get into something that you don't want to get into, right? I'm not a salesman. I'm not looking to hide anything, right? We ultimately, are providing you with an exit strategy, but we want to make sure the business fits for us as well as it does for them. So I think a little bit of both.
When you think about what you guys are doing over at Senske, is there anything, if I'm a seller, is there anything that you can offer me that's unique that I might not get from every other acquirer out there?
Yeah, I think that, or I guess, with our deals, right, everyone's a little unique, but, most times than not, right, we allow the sellers to be able to, roll part of their equity into our business as well, right? And so they get that opportunity to continue to grow their capital, but then also, there's, I think, a lot more than meets the eye of just doing the deal, right? I mean, there's a lot more structure involved, and we try to make it as seamless as possible for the sellers as a whole, right? Once they decide and once we agree to basically the backbone, right, the LOI or letter of intent, right, then we pretty much are aligned and feel, once someone's signed to an LOI, we're closing 100% of them.
Let me ask you then, for those folks who might not know what that means to roll equity, can you talk about what that might look like for a second?
Sure. So yeah, when rolling equity, we're ultimately providing the sellers at this point to be able to invest or co-invest, right, their part of their funds over into the greater Senske brand, right? And so I guess the Senske family of companies, which we think is very, very important. And obviously private equity groups are all really intrigued with it, with tons of institutional money coming into this industry, and to be able to be paired with them and a lot of those acquisitions and what we're building, what we're doing, is really enticing to a lot of sellers. So
I guess in closing, Jordan, we're coming up on 2025. Any particular high-level initiatives going on over at Senske you can talk about?
I would say we got some greenfields in the work. We have some businesses that we're looking to launch.
You're literally
going
to start from scratch in a market.
Yes. Yeah.
Okay.
Yeah. We've done that, which again is a little unique too. We don't enter every market through M&A, but we do like to invest into something that's already built and established in that market before we enter. But we've done both. So a couple of great new greenfields that we're looking to launch this year, but also some very intriguing acquisition opportunities on the horizon that we're extremely excited about, and we'll see will shape the face of Senske.
Cool, great. I appreciate you joining us today.
Thanks so much for having me.
Sure.
Absolutely.